That's just the nature of silver. It moves really fast and makes really big moves, and often when people least expect it. So I continue to think that even maybe $50 silver is possible in 2021.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And with us today is Steve Penny from thesilverchartist.com. Steve, thank you so much for joining us today.
Hey Elijah, thank you so much for inviting me.
It's great to have you. And yeah, if our viewers are interested in subscribing to your free newsletter, they can go to silverchartist.com. And also, if they'd like to hear more of these interviews, they can just hit the subscribe button right here on YouTube and hit the bell icon so they'll be notified of all the new videos we're going to be releasing. Now, Steve, what I really wanted to ask you about today was the silver market, because you're an expert on that and really the technical analysis. What are you seeing currently? And what are some of the key levels you're looking for that might signal a breakout?
Sure. Yeah. So there's really two levels I'm watching in silver. And I'll note that silver looks much stronger than gold. Silver remains bullishly postured above both of its key moving averages, specifically the 50 and 200-day moving average. And by most definitions, you could call that an uptrend. So silver has remained in an uptrend. And the big level to watch is $29.92. That was the August 2020 high, followed by $30.35, I believe, which was the little spike we got on the silver squeeze. So really, let's just call it the $30 level. And once we get a clean break above $30, I think silver could really be off to the races. Now, conversely, there's a key support line, and you can draw a trend line dating back to March of 2020, those March lows. And we're currently just maybe $1 or so above that. But if that green trend line were to fail, we could see a little bit more weakness in silver prior to a resumption of the uptrend.
Now, I'm hearing prices pretty soon of $40 or so. What is your perspective on that? Is that a little too bullish, or is that really a possibility?
It's certainly a possibility. I mean, that's just the nature of silver. It moves really fast and makes really big moves, and often when people least expect it. So I continue to think that even maybe $50 silver is possible in 2021. And I say that because gold broke out to new all-time highs in 2020, and it's very characteristic of silver to follow suit. Just lag a little bit behind. So I think it's possible we see new all-time highs in silver. And, silver, to my knowledge, is the only commodity that's trading below where it was in 1980. And not only just a little bit below, but it's like 50% lower than it was 40 years ago. So $50 silver really isn't that much of a stretch. Now, to predict that in the next few months, I'm not going to go out that far on a limb, but it wouldn't surprise me at all. So I'll leave it there.
Now, maybe a counter argument to that, if you could address this, is that what we saw in 1980 was so much of an anomaly, So on a fundamental level, do you think silver is worth upwards of $50?
I do, yeah, and that's a very valid point. I don't remember the exact data, but silver was only above $40 for just maybe a couple of days back in 1980 when we had that spike. So it's not like you had a lot of opportunity to sell at those levels. And you can make the case that the Hunt brothers cornered the market and that was an anomaly. Well, I think what we're headed for eventually in the fullness of time with silver, I mean, maybe there's no Hunt brothers, but we have Eric Sprott out there, with PSLV. There's a big movement on that. And back then, really the whole world didn't have access to the financial markets like we see now. So I think this is going to be a global phenomenon if and when people lose confidence in the currency and people, seek to own silver. There's just not enough of it. So, I do think north of $50 silver is coming. It's just a matter of time.
I think that's a really interesting point you address, how it's a global phenomenon now. We see how, for example, with Bitcoin, anybody in the world can buy it. And it's the biggest bubble probably in the history of mankind. So do you see, because we're such a globalized world now, that the movement in silver could really be explosive?
Yeah, absolutely. It's interesting that you bring up Bitcoin, because I like to make this point. I've been studying Bitcoin for a while, not so much because I'm not for or against Bitcoin. I like to see my friends in the crypto market making a lot of money. I don't personally participate, but I study it for the because it has so many similarities really to the silver market. There's a finite quantity of Bitcoin, I think like 21 million. Well, there's a finite amount of silver on the planet. And, it's ripe for a speculative mania, just like Bitcoin. And also just to study for exit strategies, I think silver is going to go into a mania eventually. And just watching what's happening in Bitcoin, it's a good thought experiment to put myself in that position and say, would I be selling a little bit here or would I be holding on? Because I think we're going to have to make those same decisions when silver really gets going.
Yeah, that's a good point. And I talked about Bitcoin being a bubble. I honestly don't know if it's a bubble or not. It seems very hard to actually figure out its intrinsic value, but just kind of making the point that, when we have such a globalized world, anyone can buy, we can just see huge price movements. Definitely. And kind of getting to gold now, your perspective on where gold is. I know a couple weeks ago, you were on Palisade Radio saying that there was a key level at 1767 and we broke below that and we closed the week below that. So do you see further weakness or where do you see that gold is right now?
Yeah. So last Friday, gold lost that key 1767 level. And the reason that was a key level is that was the low dating back to 30 November. And really, that was the low of this 7-month consolidation pattern that we've been in. So we broke below that on a closing basis on the week, and it was also a monthly closing basis, and that happened on large volume, which also adds confirmation. So the technical picture for gold, there's no denying that there's been technical damage inflicted on the chart. However, we are sitting just above a strong confluence of support between 1690 and 1715. And by the way, 1715 was the low last Friday. That's also a Fibonacci support level. So here's my baseline expectation. Of course, I could be wrong, but I think the most likely scenario is that this support level holds around 1690 towards 1715. We probably carve out a new base. It's probably going to take a little bit of time, maybe a couple months, before we start moving up to new highs. But from the big picture perspective, really, I'm not concerned because we know where this is headed. But technically, in the short term, it could take a little bit of time to repair the damage that's been done.
No, that's really interesting because we have been seeing for the last month or two kind of a disconnect between gold and silver. Do you see that continuing? Like we could actually see gold fall as we see silver rise?
Well, that's one possibility. So what you're referring to obviously is the gold to silver ratio, and that reached like an all-time historic anomaly back in March of 2020, like 130 to 1. That's never before been seen. And since March of 2020, silver's outperformed gold by a factor of roughly 2. That gold-silver ratio has come down to about 65 from close to 130. So that's closer to normal, but silver is still undervalued relative to gold. Now, I think that ratio closes by both metals moving up, just silver moving up faster.
And if we look at the fundamentals to own physical gold and silver, can you expand on that? I know there's a lot of technical analysis, right? But at the end of the day, it does seem like gold and silver are undervalued. There's a good case for that. Can you expand on that?
Sure. I could go a couple different directions with that question. But first of all, the importance of owning physical metal stored outside of the banking system. A lot of our members at Silver Chartist are new to this sector, and they want to hop right into the speculative penny stocks. And I'm not against those. There's certainly a place for those in your portfolio, but I always advocate for owning physical metal stored outside of the banking system first. And, right now there's this big PSLV movement, and I am all for that. Let's take those 1,000-ounce bars off the market. But I would caution that for people to not construe that as a substitute for owning physical that you can put your hands on. And I recommend that people start there because I believe there's going to come a time when you want it most, you're going to be the least able to get it. And imagine living in Venezuela right now, owning shares of PSLV aren't going to do much for you, but you would want the physical in your hand. Start with the physical metal, that's your fire insurance. I like to say build your moat before your castle. And then sure, if you just want exposure to the price, then PSLV is a fine trust or some of the mining stocks as well. We do all three, but I like to start with the physical metal.
And on that topic of really, having your money outside the banking system, really outside the system in general, you've also talked about how really the monetary system you believe is kind of fragile right now, that really by the end of the decade, you think we're actually going to have a new monetary system. Can you expand on that?
Sure. And that might sound sensational, and I'm not trying to be, but really our human minds are wired to think in linear fashion, but I think things are moving at an exponential rate. So the pace of change is accelerating. What used to take 3 years to happen is now happening in a year. So there's two variables I look at for the current monetary system and its sustainability. Number one is interest rates, and number two is the petrodollar system. So really the biggest variable here is interest rates. The U.S. national debt is roughly $30 trillion. We're closing in on that very quickly. So every 1% rise in interest rates, it adds $300 billion to the interest expense that the federal government has to pay every year. So it's just a matter of time on the trajectory we're on where interest on the debt is going to consume 100% of taxpayer taxes, federal tax receipts. That's the trajectory we're on. So how soon we get there is a function of interest rates. And interest rates are a function of confidence in the dollar. As people lose confidence in the dollar, specifically other nations who buy up our treasuries, they're going to demand a higher interest rate in order to take on that risk. So that's number one. And then number two would be the petrodollar system. Obviously, if that were to fall apart, that would bring a quick end to the current monetary system. And for those unfamiliar, that's where OPEC sells their oil in dollars in exchange for probably the protection of the U.S. military. And, the second OPEC nation stopped selling their oil in dollars and accepted other currencies, there goes the biggest source of demand for dollars globally.
I know the IMF also many months back was talking about a new Bretton Woods, and they didn't specifically mention gold or anything like that. But some people have speculated that a new monetary system is coming, and it could be actually somehow backed by gold. What is your perspective on that?
Absolutely. So when we say end of the current monetary system, it can sound dramatic, like you're going to be going down to the grocery store with your silver coins. I think that's an outside possibility, but that's not necessarily what I'm predicting. I call it the rules of the game. The global rules of the game, or a monetary reset, that happens roughly every 40 to 50 years. 1944, we had the Bretton Woods Agreement. 1971, we came off a gold standard. 1974, we went on to this petrodollar system. So every few decades, there is a change in the monetary system, and you don't have to look very far. Just because they don't talk about it on the mainstream media. If you go to the IMF.org website or this World Economic Forum, they are talking about these things, and they are talking about a great reset. They're talking about a new Bretton Woods, and they're talking about what this new system might look like. And there is mention of gold. There's mention of blockchain. There's mention of special drawing rights. So exactly how that looks, I don't know, but it is being talked about. We know that.
So I guess when we're talking about a new monetary system, thoughts might pop into our mind of are we going to see a lot of inflation before then? Or is it just going to be like a smooth transition to a new system and kind of like a reset? What do you think is going to happen to the dollars that we have currently in existence?
It's hard to know specifically because it obviously would just be pure speculation. But what I can say confidently is that any kind of new system will be highly inflationary. And the reason I say that is inflation benefits borrowers and hurts lenders. Well, who are the biggest borrowers in the world? Really the United States, but really all governments. Governments are the most indebted entities on the planet. So inflation bails them out. And it does so in a way that the public doesn't understand. The public is going to get hosed. And there's two ways that can happen, is either through honest default, which would be deflationary, or through an inflationary solution. And when they have inflation, the people don't understand it, so they don't know who to blame. And instead, they end up turning on each other. So unfortunately, that's probably the way we're going.
And as we look into this new system that we might be heading into, and you mentioned earlier about how precious metals might actually become overvalued and go into a bubble, what other assets are you looking to and tracking to say, when precious metals do become overvalued, to transition into those other assets? Absolutely.
So I have a lot of ratios that I track. One, for example, is the Dow Gold ratio. And that one's really interesting because twice in the last 100 years, that ratio has come down to 1-to-1. 1933 and 1980, when gold peaked at $850 an ounce, roughly in 1980, the Dow bottomed at exactly $850, 1-to-1 ratio. So I fully expect for that to happen again. Now, does that mean I'm going to hold all of my gold till we hit that ratio? No, but it can give a guideline, and you can start scaling out as that ratio is approached. Another one is gold to real estate ratio, silver to real estate ratio. For example, back in 1980, when silver peaked near $50, you could trade roughly 1,000 ounces of silver for the median home price or the median home in the United States. So I look at ratios like that.
So in these times of inflation, do you see other metals, for example, platinum, rising? Because I think one of the arguments that people make is it's not a monetary metal, right? So in times of inflation, it might not react the same way that real money does gold and silver?
Absolutely. So I do own platinum, copper, and nickel as industrial metals, and I think they're going to do very well. And specifically, platinum is historically undervalued relative to almost everything, including gold. And I look at a ratio of platinum to gold going back like 40 years, and platinum just broke out of this downtrend channel that goes back like 20 years. So I do think platinum is likely to outperform. However, I don't view it as so much of a safe haven asset. I view it more as a speculation that I think will do well. But I always start with gold and silver, as that's my insurance policy against what's happening in the world.
It was and still is a pretty crazy anomaly that we were seeing with respect to the gold platinum ratio, where we saw gold about double platinum's price. Now it's less than that, but it's still very undervalued historically if you're looking by that ratio.
Yep, absolutely. And even platinum to palladium, that ratio had gotten historically out of whack as well recently. There's been a couple of times briefly in history where palladium traded at a premium to platinum. And we just saw that for, I think, the third time in history, and it stayed up there. So platinum has a lot of catching up to do relative to palladium even.
Now, on the silverchartist.com, you also report on uranium. Can you tell us a little bit about this and why you are bullish on uranium right now?
Sure. Uranium meets all the criteria for a really compelling speculation, and it really reminds me a lot of the silver market, to be honest. But what I like about it is it's a pure supply-demand play. Sure, inflation will benefit uranium, but that's not really my primary thesis. It's just supply-demand. So the short story on the bullish thesis for uranium is that back in 2011, the Fukushima disaster happened in Japan, and the world swore off nuclear, right? So there was this big glut of supply. Meanwhile, the mining companies continued to produce uranium, even as the price was collapsing. So we ended up with this huge stockpile of above-ground reserves of uranium, and that's finally getting worked off. And the spot price fell from like $137 a pound down to like 16 or 17 bucks a pound in 2016. And what's interesting about uranium is that the world needs nuclear. I mean, there's just no getting around it. It supplies roughly 20% of the U.S. power grid, roughly 10% of the global power grid, and it's a growth industry. There's a lot of nuclear reactors coming online over the next few years, and they're going to need more uranium supply from these mines. And the current spot price is like $28, and they need at least $50 as a whole to incentivize that new production, to even break even. So uranium really is more of a when question than an if question, and that price is going to have to rise. And the mining stocks are, such a small market, those mining stocks are really going to benefit.
All right. Well, Steve Penny, we really appreciate your time today. If people would like to watch more of these interviews that we're doing, hit the subscribe button and also the bell icon. And if people would like to subscribe to your newsletter, they can go to silverchartist.com. Any last thoughts you'd like to add, and remind our viewers, a little bit about your newsletter?
Sure. No, well, Elijah, thank you so much for inviting me. It's a pleasure to come speak with you, speak with your audience. And yeah, we do. We put out a free letter every Sunday. It's called, you can get that at silverchartist.com. And we don't spam you. We don't provide a bunch of junk. The goal is to provide a ton of value for free. And we do have a premium membership, but we do keep that very inexpensive as well. But I would encourage everyone to at least go check out that free letter.
Awesome. Steve Penny, once again, thank you so much for your time, and God bless.
Thank you, Elijah. Thank you so much.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.